Hey guys, welcome back to another episode of US Stock Market Technical Analysis. In this episode 15, I'll be sharing with you my technical insights for the US stock market, namely the S&P 500, the Dow Jones, and the Nasdaq for the month of February. Before we start, I'd like to take some time to explain to you what this technical analysis video is about. Technical analysis is not about predicting where stock prices are likely to head to with 100% certainty. What technical analysis gives us as investors and traders in the stock market is a higher probability of success. So in this technical analysis video, I'll be sharing with you what are the key levels of support and resistance that I'm taking a look at, and my views about the current US stock market. What you won't get in this video is me telling you exactly where the US stock market is heading to in the future. And it's not because I don't want to, it's because I can't predict where stock market prices are heading to. And if anyone tells you that he or she can predict with 100% certainty where stock prices are heading to, then you should be running away as far as possible away from that person. Okay, so that's a pointer to take note for this technical analysis videos that I'm making for you guys. Okay, so let's begin. As always, we'll begin with the S&P 500 first, followed by the Dow Jones, and then the Nasdaq. We'll start off with the S&P 500. So we'll begin with the weekly time frame for the S&P 500 and then work our way down from there. On the weekly charts, we see that the S&P 500 is still on a clear uptrend. A very simple and easy way to see whether stock prices are on an uptrend is we take a look at stock prices from left to right. Generally, if the market or the stock is on an uptrend, stock prices will increase from left to right. If we take a look at the weekly chart for the S&P 500, we see that prices have increased from the left side of the chart to the right side of the chart. That's a very basic way to tell whether the stock or the market is on an uptrend. A more accurate way to determine whether the market is on an uptrend is to see whether prices are making higher lows and higher highs. So over here we see that this was one of the low, this was the second low, the third low, and so on. You see that for prices are making higher lows. At the same time, prices are making higher highs over here and over here and over here. So if prices are making higher lows and higher highs, that gives us the confirmation that prices are on an uptrend. If we zoom into the current week's candlestick, over here we are forming a bearish candlestick so far for the week. We still have one more trading session to go before the week closes. But as of the filming of this video, right now, this week candlestick, the bearish candlestick is engulfing the previous week's bullish candlestick. And these two candlesticks on our price charts are forming a bearish engulfing pattern. A bearish engulfing pattern is a two candlestick pattern. The first candlestick is a bullish candlestick. So this is a bullish candlestick, and the second candlestick must be a bearish candlestick. For the second criteria, we want to see the body of the bearish candlestick, which is this candlestick here, being larger than the body of the bullish candlestick over here. So when the body of the bearish candlestick is larger than the body of the bullish candlestick, we say that the bearish candlestick engulfs the bullish candlestick. And that is why we call this two candlestick pattern the bearish engulfing pattern. And the bearish engulfing pattern signals a possible bearish signal for us as investors and traders. If the markets continue to close lower later part in the day, then we will get a bearish engulfing pattern on our price chart. And this would signal a bearish sign for us on the weekly time frame for the S&P 500. Okay, now let's go on to the daily time frame to see how prices are playing out. We'll bring on our technicals. On the daily time frame, we see that the S&P 500 has been a bit more volatile in the past trading sessions. There are quite a few gaps on the daily charts. So this was the first gap. Then we had another gap over here, then another gap over here. So the increased number of gaps on our price charts shows us that there was greater volatility in prices for the S&P 500 recently. We had this huge gap down, and then prices also form a very long bearish candlestick. But we see prices still being able to hold up at this support level over here. And for the next trading session, we see that prices also still managed to hold up at that support level. In addition, prices also managed to form an inverted hammer candlestick. After a decline, when prices form an inverted hammer candlestick, this tells us that there is a higher probability that the decline is stopping and prices might reverse back up soon. Take note, this is by no means a 100% guarantee that prices are likely to reverse back up in the future. What I'm saying is that prices have a higher probability of moving back up in the coming trading sessions. Next, we'll take a look at the hourly time frame. So let's zoom out a bit over here. Over here, we had the big gap down, and then prices fell all the way and found support at this level over here. And then it went back up and encountered resistance at the old support level over here. And then after encountering resistance, prices fell back down over here. And right now, prices are finding support over here again. On the 1 hour time frame, we see prices finding support at a level of around 376. And when prices find support, there's also a higher probability that prices are likely to rise in the future. So if we combine what we see on the 1 hour time frame and what we see on the daily time frame for the S&P 500, we are receiving bullish signs on both time frames. What this means is that there's a high probability that prices are likely to move up in the future. And if prices move up, then the next resistance that I'll be taking a look at is this area over here. If prices are able to break through the resistance, then I'm going to see prices finding support at this old resistance and then continuing up from here. However, if prices do not have the momentum to break through this resistance and fall back down, then I'm looking at this support level over here to see whether prices are able to hold up again. But if prices are not able to hold up at this level, then the next support that I'll be taking a look at is this level over here. That's my technical analysis for the S&P 500. The next index that we'll be taking a look at is the Dow Jones. So we'll go on to the weekly time frame, and then we'll clear the technicals, and then over here, and we'll zoom in a bit. Using what we have learned earlier on for the S&P 500, do you think the Dow Jones is also on an uptrend? Yes, the Dow Jones is also on an uptrend, because if we see from the left side of the chart to the right side of the chart, prices have moved higher. And on top of that, we see prices forming higher lows and higher highs. So on the weekly time frame for the Dow Jones, we see that prices are on a clear uptrend. However, in the recent weeks, prices have been slowing down a bit. If you take a look at the current week's candlestick, prices closed at about $306 for this week so far. And if you compare it to the candlestick 3 weeks ago, so this is 1 week ago, 2 weeks ago, and 3 weeks ago, you'll see that the current week's closing price is the same as 3 weeks ago opening price. What this means is that prices have basically not moved anywhere since 3 weeks ago. In the past few weeks, prices have been trading sideways. If we take a look on the daily time frame and zoom out a bit over here and bring on our technicals, over here we see that there was a clear resistance at this price level of around $312. Even though prices reached close to that level, prices are unable to break beyond and break past that price level. So the price level of $312 is proving to be a significant area of resistance for the Dow Jones. And we zoom in a bit over here. In the past week or so, we see that there was a steady decline in prices for the Dow Jones. In fact, we had 5 consecutive bearish trading sessions. So this was the first one, second one, third one, fourth one, and fifth one. But on the 5th bearish trading session, prices managed to find support at this level of around $302. And on top of finding support at the price level of $302, the next candlestick form is also a variation of the inverted hammer candlestick. As mentioned, when an inverted hammer candlestick forms after a decline in prices, this usually means that the decline has paused at least temporarily, and there's also a high probability that prices are likely to reverse back up. So the support level at the price level of $302 plus an inverted hammer candlestick forming signals to us a high probability that prices are likely to move up in the coming trading sessions. Now let's go on to the 1 hour time frame to have a greater idea of how prices are playing out. Over here we see a steady decline in prices, and then prices managed to find support at this price level of around $302. And after prices found support, it went up, and then it encountered some resistance at this price level of around $309, and it bounced back down. So if we zoom out a bit, we see that at this current price level of around $306, at this price level in the past, prices have either found resistance at this level or support at this level. So if we take a look at the left side of the chart, at this price level, prices found resistance, some resistance over here, then some support here, and then some support here. So right now, as prices move towards this price level could potentially be an area of support. If prices do find support at this price level of around $306, then there's upside potential for prices moving forward. So if prices move forward, then the next resistance that you will encounter is probably at this price level over here. If prices do manage to break above this resistance, then I also want to see prices breaking above the next resistance and then finding support here and then continuing to move up. However, if prices move up and do not find the momentum to break beyond the resistance, then it is likely to bounce back down. And if the current price level of $306 is not able to hold prices up, then the next level of support that I'll be taking a look at is this area over here. That's my technical analysis for the Dow Jones. Now let's take a look at the Nasdaq. So as always, we'll begin on the weekly time frame, and then we move our way down from there. For the Nasdaq, we are also on an uptrend. Prices have been making higher lows and higher highs. And over at this area over here, prices moved sideways for an extended period of time. And that provided a base or a foundation for prices to continue its upwards movement. If we go on to the daily time frame and bring on the technicals, this was the base that I was talking about that provided the foundation for prices to continue its upwards ascent. And if we zoom in a bit over here, as prices advance over here, a variation of the hanging man candlestick forms. And when a hanging man candlestick forms after advance, this usually signals to us a bearish sign as investors and traders in the stock market. And we see that afterwards, prices get down and form a very long bearish candlestick over here. And even though prices form a long bearish candlestick over here, a bullish sign for us is that prices managed to find support at this price level of around $319. And if we take a look at the left side of the chart, this price level has been proven to be a resistance and a support to prices. Prices found resistance at this price level of $319. And then over at this candlestick over here, prices found support at this price level of around $319. For this bearish candlestick and for this bullish candlestick, prices are still holding above this price level of $319. And on top of prices finding support at this price level of around $319, we see prices also forming a inverted hammer candlestick over here. And similar to the S&P 500 and the Dow Jones, when an inverted hammer candlestick forms on a price chart, this usually signals to us a potential temporary pause in the decline and even a possible reversal of prices to the upside. Let's go on to the 1 hour time frame to have a greater idea of what's going on with prices. So if we zoom out a bit over here, we can see that for this candlestick over here and this candlestick over here, prices are finding support at the price level of $319, which we have mentioned earlier on. After prices decline over here, prices managed to find support at this area over here, and then it bounced back up, and then it encountered resistance at this price level of around $326 and $327, and then prices bounced back down from the resistance, and then it's finding support at this price level of $319. So with a support level over at this price level of $319 and the inverted hammer candlestick that we saw forming on our daily time frame for the Nasdaq, this signals to me that there's a high probability that prices are likely to move up in the next coming trading sessions. So if prices move up, then the next area of resistance that prices will encounter is this area over here. Prices can either find enough momentum to break above that resistance, or it may not have enough strength to break beyond that resistance and it will likely to bounce back down. If the support level at $319 do not hold, then the next level of support that I'm looking at for the Nasdaq is this price level over here, which is at the price level around $315. In fact, we may also see the Nasdaq trading in this range formed by the upper head resistance and the below support level for a while. Prices might range over here for quite a while before there's a clear winner between the bulls and the bears. If the bulls win the battle, then on the 1 hour time frame, we'll see prices breaking above the resistance level of the range. However, if the bears win the battle, then we'll see the Nasdaq break below the support level of the range. That's my technical analysis for the Nasdaq, and that wraps up my technical analysis for the US stock market for the month of February 2021. Hopefully this video has given you insight on the areas of importance that I'm taking a look out for and allow you to make a more informed decision in the US stock market moving forward. If you found value in this video, make sure you smash that like button because it will really help the channel grow and allow me to produce more content such as this. And if you haven't already subscribed to this channel, subscribe to this channel so that you don't miss out on future videos such as this on investing, trading and the stock market. I'll see you in those other videos to your financial success.